Well, good evening, everyone. This is Dom Tavella, and tonight my co-host is Tracy Byrnes. Today is August 19th, 2025, and welcome aboard one more evening with us, Tracy. Thrilled and grateful that you're able to join us tonight as Michael has other obligations. So we're getting used to and comfortable with you sitting in and taking over. So grateful and thanks, and looking forward to tonight.
Yeah, me too. Thanks for having me again.
So we're going to kind of start with our normal format here, and let's kind of take a peek at what happened last week. So, Tracy, I know you know the numbers because we talked about it earlier in the day, but last week was a good week for the markets after maybe a rough start about 2 weeks ago with some bad news on the employment numbers. We had a good rebound. The S&P was up just a little bit less than 1%. The Dow plus 1.8. NASDAQ 0.83 up for the week as well. But the big winner, and we're going to spend a few minutes on this one, the Russell 2000 small and mid cap stocks up over 3% for the week. And they've had a really good, strong run here, Tracy. So what gives? What do you think? What's going on?
I think it's like everyone's been waiting around for this sector to finally have their day, right? Tom, we've been talking about these guys for a long time now. We know they're super interest rate sensitive. So this notion that potentially, fingers crossed, I'm crossing my toes too for people out there that we get a cut in September, um, could be very beneficial for this whole cohort out there. So I think that's what the market's anticipating. I think these guys are anticipating it. I mean, this segues beautifully into our guest today, this notion of where small and mid cap businesses are thinking and what they're feeling. And you know what? I kind of hope for their sake it actually does pull through because they've we've had this. You and I both have lived through this where everyone's expecting the Russell to take off and then it doesn't. And then we expect it again because something else happens and it doesn't. So I'm hoping they do get their day finally.
Yeah, so let's give our viewers and listeners a little bit of a background here. So, January of this year, all of the experts, all of the Wall Street major firms, you got to buy small cap, you got to buy mid cap companies. This sector is underperformed. This is where the value is. And with the Fed cutting interest rates, oh, we're going to make a ton of money. And guess what, Tracy? It didn't happen. It's
Right.
been one of the worst performing sectors all year long. It looks like they're finally starting to rebound. And as you mentioned, interest rates might be a big part of that.
Right. But you still got to worry about, and it's hard to really tell what we're seeing with tariffs, right? We're starting to see it bleed into the numbers a little bit, but it's not extraordinary. And I think we're going to see it with the small and mid cap companies first. I mean, they're the ones that have less wiggle room at the end of the day. So, and, or less places to hide, less places to absorb. And so, yeah, great. This is great. We get an interest rate cut, but on the back end, towards the back end of the year, towards holiday time, things like that, do they start to feel the tariffs more so than the big corporations? And I don't know. That's yet to be determined.
Yeah, I'm glad actually you brought that up, Trace, because people look at just the interest rates and net, small and medium-sized companies borrow a lot of money. You look at the Apples and the Googles and the Micro, they have billions of dollars laying around. So when we have interest rates high, it's actually good for them. They're earning interest on their money. But small and medium-sized companies, they got to borrow money. They got to borrow money for inventory. They got to borrow money for expansion. And if interest rates are high, those costs can be prohibitive. If they have a lot of debt on their balance sheet, just making interest payments every month is difficult. So lower interest rates will help them a lot. But I think a point you're bringing up, which is extremely valid, they're still going to live in this economy, an
Right.
economy that might be overwhelmed by tariffs.
Right. And like we were speaking earlier, and Yardeni was out, he's an old time economic voice out there saying, even if they cut in September, we're not really going to feel it at the end of the day. Maybe because we've been talking about this for so long and it's semi baked in. So I think this cut, if it does happen, is more mental for the economy, more mental for retailers and shoppers going out there, maybe. But is it going to help our small and medium sized businesses? I'm not really sure at the end of the day if that's what's going to happen.
And even if it does, Tracy, how much,
Right,
right? So
exactly,
the
exactly.
Federal Reserve, I think there's somewhere between a 90 plus percent probability that they'll do their first interest rate cut this year in September. But if they cut a quarter of a point, they cut a half a percent, which is highly unlikely. How much effect is that really going to have in terms of growth of our economy? I think psychologically, I think you're spot on. Psychologically, we're going to see some benefit, but real dollars and cents, economic growth, I don't know. And we are seeing small and mid caps react to a possible rate cut. Real estate's another area that's starting to see a little bit of a bounce because of it. But how much economic effect are we going to see?
That's the thing. And even like for, people at home, how much is your credit card bill really going to go down? How much are those auto loans really going to go down with this like, little bit of a cut? I guess maybe if it's okay, this is the beginning of something, then I guess we have a reason to cheer. But if this is a one-off and Powell goes back to saying, yeah, I'm not, there's nothing out there that gives me reason to do it again, I'm not sure what that does for us at the end of the day.
And I'm glad you brought that up as well, Tracy. There is a very important speech that Chairman Powell is going to do on Friday. Jackson Hole is an annual event. It's just going to be his last Jackson Hole event. It's expected he's not going to be very soft, dovish in terms of his language. In fact, the exact opposite. Maybe we get a little hiccup here if he's kind of hawkish, negative. What's your opinion on market
I mean,
reaction
this is
to
his
this
swan
speech?
song, right? This is his like he's like valedictorian at college graduation here. He could say basically whatever the heck he wants. And God willing, I hope he does. But knowing Powell, he's going to probably stay the course and not really rock the waters at all, even though there's many of us out there cheering that and hoping he does. But I,
Well,
I actually, I agree with you. I think it's going to be uneventful.
look, and I don't know him personally. I've never met him. You may have interviewed him in your
No.
past life. I'm not sure, but he's a very much a diplomat,
Right.
and we may or may not agree with his policies, but he's very much a diplomat. So I think he'll stay stoic and not
Right.
rock the boat too much. But there is an element. I think you're correct that he might go. You know what? I'm done anyway.
Right. Like I'm,
I don't have a
I'm gonna
job in
go
a
sell
couple of
ice
months.
cream at the Jersey Shore for the rest of my life. Like I've had it with you people. That's what
We
I would
live
do.
in strange times, but we are looking at ultimately a rate cut. I would say more likely than not in September. There is language possibility of one later on, possibly in December, and then additional rate cuts next year. So I think based on where we are in the economy overall, it would be beneficial if we get a bunch of them in a row and create an environment where it might be healthier for growth. But we're dealing with a lot of unknowns still, Tracy. And you brought up one tariffs. What are you hearing from your clients?
So I have a client that works in retail, in women's fashion. And she said it is every day is a new day. They don't know how to plan. So th- they are feeling that head on. I mean, they produce in China, they produce in Vietnam. They are in it. Then you have the flip side of people that are just going to the store and doing their life and they don't even feel it. So I really do think it depends on where you are with it right now. I still think the holidays are going to be really an interesting tell because by then, if it is trickling down or trickling out to the consumer, I think then we will start to feel it. I also think then, as a retailer, maybe I can semi push it through because come Christmas, people lose their minds and they forget about budgets and all that stuff and they spend a little bit more maybe than they should. And so will the consumer be taken advantage of come the end of the year because these tariffs are finally starting to hit balance sheets? I think it's going to be an interesting time, like come October, November.
So I don't quite want to go there yet, but we have an interesting guest tonight. He's a regular, and he'll give us some real insight onto what small and medium-sized businesses are thinking. But the last inflation number we got, Tracy, actually started to show. When you look under the hood, you
Mm-hmm.
actually start to show some of these tariff dollars being passed on to the consumer. Maybe not all of them. Again, is it the producing company in a foreign country eating some of it? Is it the importer eating some of these costs? It's on. Clearly, it looks like some of those costs are being passed on to the consumer. It's got to affect the mood, the sentiment, and that ultimately affects consumer spending.
And you bring up all the time energy costs have come down so much, right? So does that offset the increase in the tariff because it's cheaper to ship stuff? Who knows? And then I still think we always come back down to I blame my parents, but the baby boomers who have so much disposable income thanks to years of an amazing stock market. So, okay, the prices go up, but are they going to curb their spending? Is grandma not going to buy little grandson, the toy he's looking for because somebody threw a tariff on it? No shot is she not going to buy that toy, right? So how do we balance that? Whereas the lower income consumer 100% going to feel that you have your higher income people complaining about it but still probably making purchases. So how does that all fall out in the end?
So we have an amazing insight into some of these questions, and in an environment where our own government can't figure out how many people are actually employed, and when they're not, and an environment where they can't figure out where inflation really is, we have a guest that does a pretty good job of telling us the mood of small and medium-sized businesses out there. Jeff Oak is a regular guest on our show. Can't wait to pick his brain. So we'll give him a formal introduction when we get back. Take a break here, and we'll come right back with Jeff Oak. Good evening, everybody. This is Dom Tavella, and I'm back with my good friend Tracy Byrnes, and we have Jeff Oak with us from Vistage Chair. He uh, has been with us on a regular basis. And Jeff, I'm going to let you kind of describe what you do and your background because it's really fascinating, but more important, what you do is fascinating to our work. So I'd love for you to give everybody I call it the English translation, and then we can pick it up from there.
Okay. Thanks, Dominic and Tracy. Really delighted to be here. So I have spent 30 years leading small, medium, and large companies. That's been my main deal, my main situation. And then for the last 5 years or so, I serve as a Vistage chair on Long Island, which means that I have the tremendous privilege of working with Long Island CEOs and business owners who are doing amazing things to strengthen their companies, families, and communities.
So I kind of made a joke about this, Jeff. And again, I think of us as friends, so I can poke fun a little bit. But you do an amazing job of getting statistics, and we're going to get into that. We're going to get into the meat and potatoes of what you're finding the mood is of small and medium-sized business. But why is the government having such a hard time doing such a basic job?
Wow, boy, I don't know if you got the right person on the show to answer that question because that's a real mystery. I think
Well,
the
maybe we
insights.
focus on how you do it. Why don't we start
Okay,
at
how
how
do I
you
do it?
gather your data?
So so Vistage for over 22 years has been surveying small business CEOs and owners, really focusing on their sentiment. How are they feeling about things? How are they viewing things? Are they bullish on investing in their own company? Are they pulling back? And so the data that we have that I share with you really comes from the CEOs we serve. We have 45,000 member CEOs in 35 countries. The majority of those are in the US. And it's really querying them on what they're thinking, what they're feeling about a variety of topics. We can call it good, bad, or indifferent, but this is just what our CEOs are telling us. And based on where they sit, I think it's worth listening to. And I love being on the show, and I always like underscoring each time that we begin that the small business sector creates 75% of all new jobs. That's going to be a theme that I come back to based on what this quarter's data is telling us, specifically relating to pulling back on job creation that we're hearing from the CEOs in the survey. Small businesses also generate 50% of all national revenue. So why do we pay attention to a survey of small business CEOs and owners? It's really because of those numbers as a proportion of the national economy.
Well, because every business was small at one point, right? So,
Yes.
like, right. So we can't ignore this cohort because they are one day to become the next Googles and Amazons and all that. So I get, I think what Dom was trying to get at is how do you get your people to answer truthfully when the government cannot? Because that's been a huge issue with gathering data on the federal level, at least.
Yeah, so the survey is confidential. The survey is on a regular cadence, and there is a consistency in the questions that are asked. And it's a statistically significant um, uh, percentage of all of our CEOs that respond. And what I like to describe as kind of our proof point is that the survey that we've been doing for over 22 years, an independent economist happened to notice that the results of the Vistage CEO Confidence Index is a leading indicator of the US Industrial Production Index 9 months in advance. It's not common to get leading indicators in the economic space. It's all looking in the back in the rearview mirror, a lot of it anyway. But when they discovered that, hey, this survey is really telling us what's going to happen in a very important index. And so, for what it's worth, this stuff is worth listening to from a forecasting standpoint. Obviously, you can't bank on it. You shouldn't make investment decisions based on it. You should make it based on the advice of folks like you. But that's a meaningful set of numbers.
And Jeff, quite frankly, and I'm grateful you're willing to come back on a regular basis and share this data. I think it's fabulous if you want to understand and get a pulse of what's really going on out there. But I come back to, we talk to our own clients, a lot of them also small business owners, and I think we get a real answer about what's going on in the economy. And again, it's a snapshot of the moment, but yet I think it's pretty accurate in terms of how people are feeling, business owners are feeling. And I think you guys do a fabulous job of compiling this data. Maybe the government itself should start listening to you a little bit more. Uh, but
Thank you, Dom.
I'm glad somebody's noticing. I'll say that.
Yeah, yeah, yeah. No, thank you for that compliment. And we have a great research team. Great research team.
So let's get into the numbers. I mean, I actually look forward to this session with you. What are the numbers telling us? What's the mood out there?
So I always like a dose of reality. So depending on the source of news, the U.S. economy is either booming or it's on the brink of collapse.
Mhm.
As always, the reality lies somewhere in between. So let me just look at the history of what's been happening. I'm going to zoom out and really take us from the rising tide decade of the 2010s to where we are today. So in the decade of the 2010s, the CEO confidence index over a long period of time was buoyed by strong growth and low interest rates. And the index averaged right around 98. It's got it. We have a scale from 0 to 100. It was right at about 98 for a long period of time. The pandemic came along, and at the worst of the pandemic, Q2 of 2020, that index cratered to 65. So what's that? A drop of about a third. The whole country was struggling through shutdown, supply chain chaos, and all manner of chaos. We fast forward to December of 2024. There was optimism among the business community about the business-friendly posture, and there was a short-lived spike north of 100 points. So we're back up above the booming days of the 2010s. That only lasted for about a quarter until we began to see the tariffs picking up. And where we are now, based on data that was collected at the end of Q2, is that we're back at around 77 on that CEO index scale. That's below the 12-quarter average. So that's the lowest it's been in about 3 years. It's really at the lower end of the post-pandemic range. With caution, the prevailing winds. I used to sail and did a couple of sailing trips in the Virgin Islands, and you can always count on the wind coming out of a certain direction. Those were the prevailing winds. They didn't always characterize, but in general, that's where the wind came from. The prevailing winds now are winds of caution. And Tracy, you mentioned it in your earlier comments. There's a lot of uncertainty. And that uncertainty we see reflected in the data. But I wanted to give that first context of where we were in the 2010s relative to where we are now, and where we are relative to where we were during the pandemic. So here's the bad news, and then there's some good news about uncertainty. CEOs, our CEOs are telling us that they have declining confidence in workforce expansion. Only 42% of CEOs plan to expand their workforce in the next 12 months. As notable from my perspective, there's a greater number of CEOs who expect to shrink the workforce. It's not a big number in itself, it's around 13%, but that 13% represents a pretty significant jump in the number of CEOs who expect to shrink the workforce. Why is that significant? Because the very first thing I said, small businesses create 75% of all new jobs, and we have 42% of CEOs who are saying we're not going to be expanding. Uh, that's newsworthy. That's something to pay attention to. There is some good news, and we get this good news from the comments. There's a free text in the surveys that we do. We learn a lot from from those comments. And what those comments are telling us this quarter is that small business CEOs are seeing productivity gains from 5 or 6 different areas. AI and automation is beginning to take hold, and folks are gaining productivity through technology. It's not just AI and technology, but in this context of uncertainty and caution, CEOs are going back to the basics and streamlining their processes. They're looking at the nuts and bolts of their business. How can we do it better, faster, smarter, cheaper? They're also gaining some productivity through offshoring activities and through robotics. So the bad news is on the workforce expansion front, that our survey is telling us that we're not going to see expansion. We're going to see some CEOs pulling back from that. But there's also been some productivity gains that are encouraging.
So I'm going to play devil's advocate here and be team small business. I feel like all through history, there's never a good time to be a small business, right? There's always something out there, but yet they survived. I mean, they survived the tech, some of them survived the tech bubble. They survived COVID. Like, I feel like it's the most resilient group of people. In addition to what you just said with AI and robotics, they're also the most nimble. While maybe they don't have the ability to eat tariffs, as Dom and I were talking about earlier, they absolutely have the ability to turn the ship on a dime. If somebody comes in and says, this AI product can help us do this in 10 minutes opposed to 10 hours, and they sign off on it immediately. So I got to believe that that will allow them to semi win in the end, or am I off?
No, no, no. I agree 100%. I love working with small business owners because they are extremely resilient. They're extremely gritty, uh, and they're extremely nimble. And so I think all of those things hold true. Agree with you 100%. And uh, so what the data is not saying is like small businesses are going to fail. They're going to go out of business. They're really describing what their sentiments are relating, that are going to be guiding their decision making. And what they're saying is, you know what, we're not going to be growing the workforce, and a sizable number of them are saying we're going to be shrinking. Their nimbleness is itself an indicator, because those 13% of CEOs who are saying we expect to contract, they're giving us some information that's important, that's relevant about what's going on in the broader economy. They're going to do what they think is right, what they need to do for their business, and they're very good at it for all the reasons that you describe. Uh, and they're telling us there's a lot of uncertainty.
So, Jeff, and obviously, we're small business owners. We work with small business owners. Our employees literally become part of our family, right? That
Yes.
we literally watch them grow up and have kids themselves, and maybe in some cases have grandkids. We don't want to lay anybody off, but the opposite of that is we're going to be really careful about hiring, because of this relationship we create with these employees. So, is all this uncertainty really tying right into exactly what you're saying, that at some point the owner's like, I'm just going to hold off on hiring. I'm going to freeze hiring until I have a little bit clearer picture here.
Yeah, I think your insight's an important one. That small business owners, they are many of them, most of them, the ones that I know, they're very reticent to lay people off. They'll just play a little conservative on the hiring point so that they don't have to lay people off. Um, the real news story for me is not that owners are going to grow the workforce or keep it the same or shrink it. The news here is that there's uncertainty. And during a time of uncertainty, business owners are going to do what human beings tend to do when they're facing a threat, is they're going to reduce their risk. They're going to be careful. And I think the data is showing that they're being careful as it relates to hiring. And Um, Carefulness is not the same as inaction. Part of their carefulness is, hey, we got to increase our productivity. We got to do some stuff to make up for the gaps that we're expecting. And so that's why you see the kind of productivity gains in the areas that I described: AI, technology, streamlining processes, et cetera.
So then going forward, I mean, we don't see an end to the uncertainty anytime soon. Does this mean they're on hold? Because I agree with you that it's not going to create inertia, but it's sort of going to create like that whole we'll wait till next year thing. So are we going to keep putting decisions off? Because that's not what small businesses want to do. They want to move yesterday, right?
Yeah.
So what's the the marker that they need to see for everybody to say, okay, it's a go?
Yeah, great tee up, Tracy, for where I'd like to go next. And one of the things that I share each time I come on the show, and Dominic, you've heard me say this, when I approach data, I'm really asking myself really three questions: the what, the so what, and the now what. The what is the data. That's just what the numbers say. The so what is, what does the data mean? And then the now what is, okay, what do we do based on that information? What actions do we take? And so I'd like to pivot we've talked about the what, which is the data, the so what, which is that owners are experiencing, CEOs, small business CEOs are experiencing uncertainty based on what they are seeing. The now what is what CEOs are saying they are doing. And I also like bringing in what I'm hearing from the 50 CEOs that I work with. We meet on a monthly basis. I meet with them privately once a month. And I listen a lot. I spend a lot of time with CEOs. And there are four things that I want to highlight in the domain of action. They're not going to sit back. They're not going to just put it in neutral. But here are the four things that the survey is telling us CEOs are in the process of doing, and that I see in the members I work with as well. The first thing is they're being very proactive about protecting margins. The margin equation might be the most important equation that CEOs are solving for, and which we do well to pay attention to as commentators and observers of the economy. So let's just take productivity, for example. If CEOs have efficiency gains that can be made, now's the time to do them. And those are two main buckets, and they're the same buckets they've always been. The labor bucket and the capacity bucket, or productivity, to use another word. And so the efficiency gains that they're making relates to being cautious. Dom, your comment about there being small business owners, and you were sort of talking from your own experience. They would rather not fire people, so they'll be a little slower perhaps in hiring. That really is an efficiency gain driven by a concern about protecting margins. And the doubling down on AI isn't just because it's the newest sexy thing and I want to try it. They're doing it to get the efficiency gains to protect those margins. I think the second thing that we're seeing among our small business CEOs, and I'm seeing it among the ones I work with as well, is they are revisiting their pricing strategies. In a context of rising costs and compressed margins, you got to look at pricing. And the pressures are coming from four main areas. Labor, materials, and overhead is one bucket. Those are the biggest things on most people's balance sheets. It's the things that they control. The second area is external stuff, the exogenous stuff outside their business, the tariffs, and the uncertainty about what's next from a economic policy standpoint. That's an external factor that they have no control over, but it factors into their margin equation. With the widespread uncertainty among consumers, the third factor is that people are slow paying. they're extending out their receivables. So people are delaying to pay receivables. That is contributing to pressure on margins. And the fourth area is uncertainty about the timing of revenue. People are still paying their bills. Business owners actually don't know when they're going to be paying them. And I have one of my members who completely changed his whole business model to slow down the rate at which his clients would have to pay to make it more attractive to work with him.
So Jeff, we're at a break right now. Why don't we take a few minutes and then we'll literally come back and pick these off one at a time and focus on them because I think this is very relevant to where we are in the economy right now. So why don't we take a few minute break and we'll come right back with Tracy and Jeff and we'll pick up on the subject. Welcome back. This is Dom Tavella with the Lebenthal Report with my friend Tracy Byrnes and our guest Jeff Oak. Jeff, you left off at really some terrific points. So I'd like to maybe take a couple of minutes and focus on them. Let's talk about proactively trying to protect their margins and the introduction of technology, particularly artificial intelligence. When I think about AI technology, I'm thinking about the Metas of the world and the Apples and Googles. I didn't know yet that small businesses were adapting this as part of their normal business strategy and trying to incorporate it to improve their margin. So maybe give us some insight on that to start.
Yeah. So what's really cool in working with small businesses, as Tracy touched on earlier, they're incredibly creative, incredibly innovative, and incredibly agile. And so folks are doing all kinds of things, even businesses that have very low technology elements are finding ways to incorporate technology in the work that they do around the edges. Um, in the food service industry, for example, um, I have a member who is um, taking phone orders a little differently. I give them my business on when I'm out and about looking for a bite to eat. And I used to always get a person. Now I'm getting encouraged to utilize their online app, which I probably should have been using from the first place. But that's a simple example. It's a food service industry, low technology, but they're using technology around the edges. On the other end of that spectrum, I have several members who are extremely tech savvy and who are using intelligent process automation. They're using robotics. They're using artificial intelligence, and not just generative AI, but other forms of AI. People say AI and they think Chat GPT. That's just the tip of the iceberg. There are so many varieties of leveraging technology to make efficiency gains that it's stunning.
So you had mentioned, Jeff, that there's 4 actions that you're hearing from CEO, and we've just talked about the first 2. The last 2 seem to be a little bit more on the personal level and how CEOs are managing their way through this time. Maybe
Yeah.
you can talk through that a little bit.
Sure. Yeah, the margins conversation and the pricing conversation is sort of tactical business, but you're right. The last 2 really reflect on the person of the leader. One of the things that the survey showed to us is that, you know how like if you're taking a picture with your iPhone, with your fingers, you can make the camera zoom out or zoom in. Um, in the old fashioned 35 millimeter cameras, there was the size of the aperture, the size of the opening, which had the same effect. It either zoomed in to a detail or zoomed out to a broader, wider vision in the camera, what's being incorporated into the photograph. And what we're seeing, what we're seeing among our CEOs and the actions that they're taking is really widening their angle of vision, kind of like incorporating a bigger landscape when taking a photograph. They're getting accustomed or trying to get accustomed to rapid change, unpredictability, and the uncertainty that comes with it. Rather than viewing it as an exception, they're really viewing it as the new reality and shifting their mindset to accommodate that. One commentator, one of our research guys, talks about opening the aperture of uncertainty, opening up the wide angle lens, mindful of the uncertainty that now populates the picture. And you want to make sure that you're fully seeing the full picture so that around the edges, you can deal with things that might be sneaking up from the side. And so that's really, you put it well, Tracy, it's a personal part of the life of CEOs is having to widen their angle of vision and zooming out to account for the uncertainty. And the fourth one was one that really got my attention because it was a little disquieting to me. This survey showed that 25% of CEOs report that they're feeling burned out either on a daily basis or frequently. That's a big number, higher than we've seen. 1 in 3 CEOs cites overwork and the lack of ability to delegate. A large number of them are looking for support from leadership teams, and it's not sufficient, not because their leadership teams are inadequate, but those leadership teams in many cases are overwhelmed as well. And what does this mean as an action item? It means that in order to lead well, you got to take care of yourself mentally, physically, emotionally. And it's only when those things are tended to that the best leaders can be best prepared to lead their business through uncertainty. And it brings something to mind. It's an old something that we experience all the time when we're in an airplane. The announcement that comes from the over the intercom: in the event of the loss of cabin pressure, put on your own oxygen mask first before assisting others. And this is counsel that I give to the CEOs that I work with: is you got to put on your mask, because you got to make sure that you're healthy and well before assisting those around you. You got to take care of yourself. That's a really crucial dimension of leadership. But it's this nonstop uncertainty that they're experiencing exogenously. They're experiencing it outside their business through the uncertainty, the tariffs. We talked last quarter about tariffs on, tariffs off, tariffs on, tariffs off. We're not sure really where we're going to land on that and what the consequences will be. But when you think about the leader who's waking up just wondering what the day is going to bring, where's policy going? That level of uncertainty contributes to stress and burnout.
So, Jeff, going back to your confidence index, clearly we had that big spike after the election. There was some high hopes about the new administration. I'll say clearly, but I guess that's really my question. This whole conversation of tariffs on and off, we will have them, we won't have them. How do I adapt, bob and weaving? Is that literally why the confidence number? Is it tariffs? Can we finally put the finger on that and say it's tariffs that has not only the business confidence level so low historically, but also adding to this great deal of stress that these leaders are feeling?
Yeah, I mean, I think tariffs is one of them. I think uncertainty about where interest rates are going to land and when they start moving is also a principal source of uncertainty that we're seeing in the survey of our CEOs. There's geopolitical uncertainty. The wars in Ukraine and Gaza. I mean, I have members who are sourcing goods all over the world, and the uncertainty that exists in key pockets around the world, is introducing a lot of uncertainty as well. So I think tariffs is one part of the equation, but there's more than that.
So then I guess flash forward to 2026, or can you? We get through this year, God willing, we get a little bit more guidance on the tariff world. What does 2026 look like? Because we have this administration that supposedly is, super favorable to small businesses. That was part of the platform coming in. We finally got this big, beautiful bill. I don't know if it's going to help or hurt small businesses at the end of the day. What does 2026 look like for your constituents?
So I'll tell you what I'm seeing among the high performing ones. They're not going to sit still, right? Because they're high performing. So I think the ones that in the midst of the uncertainty, I've served on a lot of boards, and I've had my share of organizations that have been through financial challenges where we had to cut back. And I, among many other board members, was keen on saying, okay, yeah, we do need to cut back on some certain things, but we really need to be especially smart about our investments. You can't cut yourself to prosperity. You got to make smart investments, even as you're trimming the things that you can trim. So I think the high performing CEOs who make efficiency gains, who make investments where they can make gains, and the ones who revisit their pricing strategies to really manage that really critical metric, those are going to be the companies that come through this in the most strongest position. And it's what I'm counseling my members to do. I don't tell them specific bets that they should be making because they know their business better than I do. But I do counsel them to have the right mindset about making smart investments, even as you are managing costs and productivity as carefully as you can.
So Jeff, that kind of puts it on a silver platter for me. Every crisis, I think, has an opportunity. So is that where the opportunities are? Is that where the smart business owners are going, okay, we are dealing with this drama on one side, but the opportunities will be, and I'll leave it open-ended for you.
The opportunities will be where they have gains in efficiency they can make. Now is a really good time to do them. And where look at all the factors contributing to your pricing decision making and get out the pen and pencil, get out the pencil, and really look at what you have control over, and how you can best manage to protect those margins.
You brought this pricing strategy up a bunch of times now. Does that basically mean think twice before you raise prices?
I think what I'm trying to say is be smart, be strategic in how you approach pricing. It's not counsel to either raise your prices or lower them or keep them the same, but be very smart. Every business is different. Every customer segment is different. Some have more flexibility than others. Be smart about where you have leverage, and use that leverage.
And Jeff, a subject you brought up earlier, small businesses looking at the interest rate environment. Clearly, they're probably looking for some relief here, and so that they can use that excess revenue for business expansion, growth, inventory. So, are they really counting on this? Is it really going to help? What kind of feedback are you getting?
Investment always helps. Businesses, they grow very, very quickly. Small businesses, many of them grow very, very quickly. And for that, they often need, outside capital. But my members aren't just looking for capital for the sake of getting capital. They've been able to most of them have been able to access capital when they need it. But you also don't want to take on debt, for example, or you don't necessarily want to give up equity or give up control of your company, um, unless and until that's going to make sense for you, whatever your long-term game plan is. I have some members who wish to sell, um, way down the road. I have members, they're all on the spectrum on what their time frame is, and there are a number of them who are not interested in selling. They want to harvest the greatest value from the company that they have. So it's really, be smart about the investments you make, and be strategic about how you access capital.
Yeah, and I know I only have like 2 minutes here, but I think at the end of the day, I would think your members are, we're going to do business at no matter the cost, right? We're not going to let this stop us. Interest rates may come down. They're not going to make or break their balance sheets at the end of the day. Maybe they're going to help a little, but as Dom and I talked about earlier, probably not going to make a huge difference at the end of the day. So these guys just need to keep plowing forward. And it seems to me like tariffs are going to be the biggest thing to settle them down so that they can keep going.
Yes, and I mean, I think, well, I'll just speak for my members. I have some members they source a lot of material historically from outside the U.S. They're going to be impacted most, by tariffs. I have members, who are in retail. They're going to be most, and they don't source a lot of some. Many of them don't source a lot of materials from outside the U.S. So they're not affected as much by tariffs, but they are affected by inflation fears, on the part of customers. Because I have one guy who says, instead of going out to dinner, every Friday, maybe some people go out to dinner, once a month. So the behaviors are changing, among customers and clients vary widely. In the small business sector, it's a huge sector, and it's tough to make generalizations because there's so much variation.
But the economic implications are pretty black and white, and that's the employment side and economic growth. So having these kind of insights and seeing where the small business community is, I think is phenomenal. So we've come to a shockingly, I don't know how we always get here with 40 more questions, but not enough time. But Jeff, I look forward to you coming back and giving us some more insights into what we're doing. And again, I think it's very, very, very relevant to where we are in the economic cycle. So thanks for bringing this to us.
It's my pleasure, Dom, and great to meet you, Tracy.
You too, Jeff. Thank you.
So this is another close to the Lebenthal Report. Thank you, Tracy and Jeff, for being with us tonight. We look forward to seeing you next Tuesday night, and everybody have a great evening and a great week ahead.